Hey, what is up, dudes and dudettes? So this is dinner time, also a video. I might post it today or post it tomorrow. This video, we're gonna talk a little bit about callable securities, especially callable preferred shares. A lot of you are talking about this and asking me questions about this on Patreon or on Discord, asking me about, what does it mean by it's a callable preferred share? What does it mean for the shareholders? And as well as, as for MMTLP, why they're doing this. And on Discord, I gave two very general answers. In this video, I'm gonna make it sort of like a very short and general answer for that. And then later, when I'm behind my computers, I have my studio set up in my room. I mean, I still need to rearrange it, or we can just use the old setup, right? And then I'm gonna make a video with some visuals and with detailed scenario analysis. But for here, hopefully I can do this video in under 5 minutes. So callable security is literally, basically, if I ought to issue a callable security, that means usually they're in a callable preferred share situation. You always have either a percentage dividend involved with that. For example, it will be a flat amount. Like for example, it goes like a bond, okay? Like you will have $1,000 face value with say a 7% annual interest rate, and then every year they will give you 7% of that set interest rate. It's like buying into a dividend stock, but really you're buying into a bond. And essentially when a company issues preferred stock with callable options on top of it, callable preferred shares. It literally just means the shareholders' money are funding their company, therefore you get a kickback of whatever revenue they have year by year. In this case, they really need to sort of offer or secure or post what percent of dividend they're thinking of giving out, or is it going to be a floating thing? If it's just going to be a floating callable preferred shares, it's sort of like a dangerous situation, which plays into my situation number one, which is they are using the callable option to lock shareholders into the private company. But the fact that they don't really tell you what your potential profit margins are, and basically giving you a sound reason of why should you place your money within this private oil company. A lot of people are commenting on my videos and saying I'm really dumb because I don't understand that it's a asset holding company. Therefore, on their presentation, it says 10% recoverable oil. But in terms of this oil co situation, if you think about it, if you really have just a 3.2 billion barrels of oil down there underneath our feet right here, right? Wouldn't you want to have a bigger profit? Like you want to operate it, because when you operate it, you will probably make more money. Or you want to operate it and to prove everyone that it's operationable, and the big daddy oil companies will buy you for a higher premium. Wouldn't they want to do that? They probably would, right? As a business person, you want to know that. For any businesses, sometimes a lot of big companies just want to show a prototype or show a proof of concept, and then they will pay a higher premium to buy it. In this case, they would, but doesn't seem like they're willing to do that. If they really think it's a profitable thing, what they would do is they will make the security callable at a specific percent of interest rate, and then they would specifically say that, hey guys, here's our plan, and then the presentation will be more specific, and then they will attract more investors. But in this case, the callable option might just be a way of locking everybody down into the private company. As you know, a couple of days ago, the press release just came out and saying they're proceeding to phase 2. Either phase 2 or phase 3 of this situation, which is official asset transfer of all of these oil assets from Metamaterial to OilCo. And when the transfer is completed, technically speaking, George is not liable for whatever happens in OilCo anymore. I think he's gonna make it that way, because I think he smells the unordinary reality of this transaction now. And I think he's been worried for the past few months about this deal, because think about it, the only way that later on, if there's any investigation, especially SEC is conducting a lot of those investigations toward A, meme stock, B is those SPAC or merger stocks, reverse merger stock over the past year because of the retail frenzy. Just say it just turned out that something went wrong. George just needs to get this transaction done before March, because when March comes, especially before tax season, a lot of those SEC investigation, like, started heading their way towards all these little companies and everything. And our IRS will come and knock on your doors, those kind of stuff. So I think this transfer will be completed before March 24th, which is the middle of the March. I think it's either March 24th or 21st. It's one of those option expiration days. Especially, they probably should complete it before April, where tax season started to kick in and everything, right? The second situation here we're really looking for is just the company is trying to change the terms of how this OTC listing is functioning. So if it's not callable, that means if they didn't make it callable before they transferred the asset, and when the assets are transferred towards OilCo, that literally means that all of these MMTLP shares will just default goes to zero. That's for sure. That is absolutely for sure. If you go ask anyone, that will for sure. If you make it callable, that just means they can change the terms of this preferred shares actually on paper. And also, when you make it callable, it also make it more appealing, which goes into the third situation where they're trying to make the security more appealing and then to basically create a price floor. Because if you are MM of the security, you essentially take 20% of all the fund raised, right? Like you guys know that any public offerings, no matter what that is, a bond, a equity offering on the open market, no matter what open market that is, you have a underlying underwriter cost. But for those MMs on the OTC market, you actually don't have not really job security, how do you say that? You don't have a guarantee of these offered amounts per se, but when they have a callable option on there, that literally just means for them, they can calculate better what their costs are. And then by the end of the day, when they need to get paid by this transaction, they can say, oh, it's callable and our cost basis is this, and 20% of that cost basis, you have to pay me, that kind of thing. So it's one of those MM moves. And another question is whether it's issuer callable or is it company callable. There's no difference here. If it's it really depending on, this is the part I hate OTC market, because you don't have any disclosures, you don't have any document that will actually tell you whether this is a MM's strategy or is it the company actually making it callable. If it's company actually making it callable, then it literally just means that company can redeem, basically buy back those this callable shares before its expiration date, okay, or its maturity for those of you who are in finance, right? But the thing is, this thing doesn't have a maturity. Right now, the maturity date is actually 12/31/2021. Technically, it's already expired. And by making it callable, we actually can extend this maturity and then extend this liquidity line, or line of liquidity in this case. So I think they're worried. I think they're watching, they're listening to the community. They're listening to a lot of people on Reddit, or just the people who are the MMs are listening. So they're doing this is because either they want to extend the maturity date of this, basically make it can be traded for a longer period of time, or they hear people worrying about going to zero and they're afraid of a massive sell-off. They decided to put that, so then a lot of people will have a false sense of security of it has a cost basis or a cost base there. But as you know, there's no such thing as cost floor anymore in this market because interest rate is about to increase. All right, I think this is it for this video, and I will show you guys what I cooked. So I have my trusty wok here. I cooked some. This is actually not pad thai. This is actually chow fan. If you guys know, I really like noodle food, and it looks really nice. And and I will show you guys the chicken too. So this one actually looks really nice right here. And for those of you who don't want to see the cooking content, you can just click off or whatever, do whatever you want here. And for those of you who are curious about what I cooked, this entire chicken is actually pouched right here. You see that juicy chicken right here? Right here? Yes. I'm gonna cut it, and then it's gonna be like a very nice Hainan style pouched chicken right there. And I'll make sauce of it. Anyways, this is it for this video. Hope you guys love it. And I'm about to eat. And look at this. Look at how beautiful this is. Oh my God. And I think I'm doing an innovation here. I'm gonna do Hainan chicken with caviar, because Hainan chicken actually doesn't really have a lot of flavor in it. And I decided to put caviar on top of it. And for those of you who just want to follow the cooking bits of this, in the next video, I will show you the end result of this with caviar on top. See you guys on the upside.